Okay, good morning, guys. I was supposed to record this session yesterday, but we didn't have electricity in Ondangwa the whole of yesterday. It came back around 10 there. But yeah, on this video, I want us to talk about one of the important factors when it comes to trading, and that's psychology. Okay, quickly before we start, this is a trade that I took a while ago. And right now I'm in profit. It's in profit right now as we speak. So just make my stop loss there. Just a small trade. Like I don't take big trades before New York session. It's a bit risky, but if it was a big trade, it could have been in good profit right now. Stop loss 4139.4. My TP will be 41443.5. Yeah, I think I can lock in my profit there. Good. Okay, now let's get back to our while trading is going on. Let's go back to our okay. Like I said, today I want us to talk about psychology, the mindset, the trading psychology. Guys, when it comes to trading, it's very important to be aware of your mind, of your state of mind. You see, when we talk about psychology, we talk about things like your emotions when it comes to the market. Remember, you are dealing with real money. You have invested your money, your hard-earned money in a trading, and obviously your emotion will be playing a role there. So you cannot avoid your emotions to play a role, but what we do, you have to learn how to manage your emotions. Get it? To manage your emotions. So trading psychology involves emotions such as greediness, FOMO. FOMO is a fear of missing out, and impulsive trading, and all others. So let's start with greediness. Let me say you have taken a trade, and then you have taken a trade, and then you can see that your trade is in profit. But because you have a big heart, that greediness, instead of taking your profit or locking in your profit, you let the trade play. And then with just one candlestick or so, the market just reverses, and then it humbles you, and then it takes you out all your profit that you made. So when it comes to greediness, it's very important to take trades, to take winning trades, or mostly just to at least to capitalize, to lock your profit in, so that even when the trade returns, even when the market comes back, you are not going to lose any money. Maybe you didn't make enough, but you are not losing anything, so you still have capital to trade on your next trade again, instead of losing all your money, and then on the next trade nice opportunity comes, and then you will not be able to take the trade. Why? Because you have risked your capital. You are in profit, but instead of taking your profit, you allowed it to play because you wanted more. So it's very much important to be what? To be mindful of greediness. And then the next one that I want to talk about is FOMO. FOMO is an abbreviation for fear of missing out. Fear of missing out, you see, you are sitting in front of a chart, and then you see like the price has reversed, it has confirmed, but it's not so confirmed. But since you are afraid that maybe it will play in your favor, but you did not confirm all your confirmation, you did not meet all your confirmations, then you jump in a trade because you are afraid to miss out. Fear of missing out refer to the fear of missing out on a potential trade on a move. So when you are afraid of losing out, you impulsively enter trades without conducting proper analysis. You get it? Impulsively enter, you just jump in a trade without doing proper analysis, and this leads to poor decision making and unfavorable outcomes. So you end up losing money because it was a poor decision. It was not based on your trading strategy, for example. So that's fear. We spoke about fear. We spoke about greediness. And then let me touch about impulsive trading. Emotional impulse can lead to irrational and unplanned trades, the same as the fear of missing out. Impulsive, let me give an example of impulsive trading. You see, when you are learning to trade, you want to take 10 to 20 trades a day, which is totally not necessary. Good traders only take 1 or 2 trades and they make money just in those 1 or 2 trades per day. So impulsive trading refers to taking more trades. Every time you see something, you take. Every time you see something, you take. Now, those decisions are not quality decisions because they are not quality trades. Because number one, you did not follow your trading strategy. You did not make proper confirmations. So you just enter. Then it also comes back to fear of losing out. You just enter trades, enter trades, enter trades. At the end of the day, your account is blown. So yeah, that's emotions, greediness, fear of missing out, and impulsive trading. Okay, the other thing is you see, sometimes when you trade, you can see that your trade is in loss. You can see that this trade is not going to win. It's in loss. Sometimes it's safe just to cut the loss while it's small. Cut a loss small, a small loss instead of letting it play out. So all these things has to do with emotions. That's why I said it's very important to understand your emotions, to be aware, because it also comes to discipline. You have to know how to discipline your mind. To tell your mind, no, now we are staying out. To tell your mind, no, we are not taking that trade. You must be in charge of your mind. Otherwise, if you are not disciplined, no, trading is not going to work out for you. I have to admit, for me, especially for me, discipline is one of the qualities that I'm still working on. I sometimes still find myself failing to discipline myself not to take trades. I sometimes struggle to discipline. If I don't see a proper trade, I just end up taking trades that are not properly confirmed. So I'm also suffering from discipline. But like I said, it is something that you have to be aware of first for you to start working on it. So that's something that I personally am working on, my emotions as well, especially when it comes to discipline. Yeah. Guys, trading is not easy. Trading is not difficult, but it's an emotional game. Trading is an emotional game. Emotions, discipline, and patience. You have to be patient even a whole day just to wait for one trade to play out. Once you do your analysis, you just have to be patient and then wait for your trade to play out. So it's a patient game as well. Patient, discipline, and emotional game. Okay, this is my trade, which I'm currently in now. Let's see. Okay, almost TP1. It's almost TP1. Yeah. Good. Yes. What was this? What else can we talk about? Okay. We spoke about the mindset. We spoke about greed. How to develop a proper mindset. How to develop a proper mindset is just about being aware of your emotions, guys. Emotional. If you are not in charge of your emotions, how to think, how to reason, then you won't be able to make a proper decision when it comes to trading. You'll just end up losing your money. And then when you lose money, then you'll end up saying, nah, no, trading is a scam. Trading doesn't work. Trading is what. But it's not trading, it's you. You are the one who's failing to be in charge, take charge of your life. It's not trading. And the other thing that is also important to mention is when it comes to trading, guys, your money, the money that you invest in trading, make sure it's the money that you are willing to lose. Don't go invest your rent money, because when you invest your rent money, your emotion will definitely be part of your trading. Then you'll end up making wrong decisions because you are afraid of losing that money. So only invest the money that you are willing to lose. You get it? When you invest, don't go invest 1,000 when you are not willing to lose 1,000. Invest a 500, invest a 300, and start from there. If you can make money with 300, then you can make money with 1,000. But if you cannot even turn a 300 into a 400, then how are you going to turn a 1,000 into a 3,000? So it doesn't matter how much it is, it's about consistency. You see? Consistency. Let me just note this area here. If the price fail to break here, I'll take I'll cut my trades. But if we break, I'll add more trades. Because if we break, then we can expect the price to what? If we break, then we can expect the price to retest before it continue coming there. But if it fails to break this area, then I'll just take my profit, the small profit that I've made. It's enough. $10 a day, guys. It will take poverty away. $10 a day, $10 USD. It's how much? It's about 200, 300. It will take poverty away. It's money. It's a lot of money. Okay, the other thing that we can look at as well, it's a journal. A journal, it's a book. It's like a diary. So it's very important to be taking notes of your trades. As you take a trade, as you do back testing, you record what you are doing. Then you see when you write something down, it's easy to remember. Rather than just reading. When you note something down, it's easy to remember. So it's very important to have a journal where you take your trades. Then you know this was a winning trade because I did A, B, C, D, and D. This was a losing trade because I did not do A, B, C, D, and D. So that will help you to make proper decisions on your next trades. It will help you to make proper decisions on your next trades. Self-awareness, we spoke about self-awareness, we spoke about discipline, and the importance of backtesting. What I advise is avoid having lots of role models that you are following. Each and every person have their own strategy of doing things. You might all be successful, but you did not use the same strategy. You must not use the same road. You get it? The roadmaps are different, but the destination might be the same. So you must follow someone that you see you can resonate or you understand what they are doing. You see? Don't just follow everyone. This one you see SMC trade strategy today. Tomorrow you see pure price action. The other day you see a trend line strategy. So you get confused, and then at the end of the day you won't even know which strategy to follow anymore. Stick to one strategy. Stick to one mentor. Stick to one role model, whoever that you look up to. And the other thing, choose 2 or 3 currency pairs that you are going to master. You see, once you master 1 to 2 pairs, then you will know their movements. Then when you do your back testing, you know how they move, you know how they behave, you know how they, it's like when you have a girlfriend or a boyfriend, you know how they behave because you are used to them. But then if today you are trading GB USD, tomorrow you are trading US30, you are trading NAS 100, it will be very much difficult because you are not used to those pairs. The pairs don't behave the same. They don't behave the same way. US30 new extension behave this way. Gold US30 behave a certain way. So when you master one and back test and follow and come up with a strategy on 1 or 2 pairs, that will increase your chances of being good at that pair. Specifically, like for me personally, I only follow US30. I only trade US30. I might go to NAS 100 or I might go to gold. If I find a good trade, I will take it, but I hardly do that. I follow US30. I wake up, I follow US30. How is it behaving? I see how it has been behaving the previous day. What do I see next? And so on. US30, that's it. See? So now if you ask me, what do you think will happen in US30 at New York session? Then I'll be able to tell you, no, probably it will move this way and this way because I've been following it for a long time now. You see? So stick to 1 or 2, 3 pairs. choose your poison. Yeah, choose your poison. Choose your poison. Okay, guys. What is it I did not touch? I cannot stress enough the importance of psychology, guys. You must self-awareness. You must really be self-awareness of your mind. You must be disciplined. You must be patient. Forex is not difficult. Forex is not easy as well. The reason why most people are not excelling in Forex is because we get frustrated because we are not disciplined enough. And then we end up giving up. But if you stick, for me, I refuse to give up on Forex. I've loaned so many accounts. I've wasted so much money. I'm still trying to find my edge, but I believe and I have confidence that if I just keep doing what I'm doing, it will be worth it. You get it? It will be worth it. So it's just a matter of doing things right. Being patient, I cannot stress enough. Being patient and disciplined. Patient and discipline. Wait for the trade even a whole day. If you don't find a trade that day, just leave and wait for tomorrow. You preserve your funds instead of making poor decision and then you lose your money. Tomorrow when you get a proper setup, you don't have money to trade anymore. Okay, my USD trade here is going well, so just have to wait. If it break this area, then I'm going to add more trades, but if it's struggling to break, then I'll take my profit. Yeah, so okay guys, we meet on the other video. I think on the other video we will start with analysis, market analysis. We'll start with the charts, like how to analyze the chart, what tools to use, how to my strategy, what strategy do I use, trend line strategy, SMC strategy, and so on. Supply and demand, support and resistance, all those ones. On the next video we will look at those ones. I think I will release that video this afternoon or tomorrow morning. But psychology, guys, psychology is very important. If you have any questions, you can just post on a group. If there's something that you want us to talk about, specifically that a video that you want us to do about, or maybe this was not clear enough, just post on a group and then we can chat, we can talk about it. We share the knowledge, guys. I'm not there yet. I'm not where I want to be, but I'm also, the more I share the knowledge, the more I also learn. So let's keep sharing, let's keep educating one another, and we will meet on the other video. So yeah, happy trading, guys. Okay, I've seen we have break our area here. So this is 15 minutes. If my candlestick close above this 15 minutes, then I'm going to add more trades on this trade. So yeah, with that said, let's meet on the other video again. Ciao guys. Tate Johnny, I hope I have covered the topics that you wanted us to cover. So yeah, talk to me.